Welcome to TWATT, the world according to TAS, the most important show on the planet. And today is live stocks. We're talking about the financial markets. Shout out to Danny 2 times. Shout out to Warren Buffett Jr. We are here. So I got Danny 2 times on the line. I got Warren Buffett Jr. on the line. And we're going to talk about that first. What's one stock that can get us popping from 6 months to a year? Now, I'm going to have one of you guys go first because I'm going to do some technical stuff over here so that whatever stock that you talk about, I'll be able to pull it up and the people will be able to see all of the stuff that you're talking about on screen. So with that said, Warren Buffett Jr., what is your stock that you would suggest to this girl is to invest in one stock and she wants it to boom within 6 months to a year? Now, with that said, there is something to keep in mind, and it's the elephant in the room. We can't pretend as though it doesn't exist, and I'm not gonna say it, but it's gonna be said.
COVID-19.
COVID-19.
We can't forget that. We can't forget it. We can't forget it. Warren Buffett Jr., what is your one stock that is going to boom from 6 months to 1 year in your eyes?
If I had to pick going on my knowledge, I'm not sure what her finances is looking like, but if you're trying to boom at a relatively large pace, I would go with Shopify.
Shopify. All right. So what's your rationale behind Shopify there, Warren Buffett Jr.?
Shopify is a company that I had actually in my portfolio last year around, I think it was August. And at that time, I had Shopify like 3 shares for 300, let's say $227. They took a slight dip. I was fairly new in the market, got nervous, cashed out. Now, if you look at Shopify today, Shopify is at $620. Now, if you look at most companies right now, they're going to be in the negative for what they made yearly. So year to date, they're going to be in a negative. Shopify surpasses all negatives. It's just straight green. It's a long road ahead. And also, breaking news today, well, it actually came out yesterday, Shopify has become the second biggest company, most valuable company in Canada. Everyone is at home. COVID-19.
COVID-19.
What is everybody doing? They're creating businesses. Yes, sir. So people are taking advantage of staying home, working from home. You're creating a whole new wave of entrepreneurs right now. And I don't see this company falling off anytime soon.
Okay. All right. So let me pull up Shopify's details here. Give me just 1 second, ladies and gentlemen. All right. So we're looking at Shopify's details right now. And like I always tell people, and like you can look at the bottom of your screen right now, the ticker that's going by, that is all the prices on Valentine's Day. Valentine's Day for me is a gauge of when the stock market was doing fine before. So this takes place before. All right. So on Valentine's Day, Shopify was at $531, and now they're at $620. So are these boys? Are they COVID-19 proof?
COVID-19.
Warren Buffett Jr. Because they're up already from COVID-19.
Yes, well, they are COVID-19 proof because February 21st, mostly every company failed. Shopify actually fell to $322 and went on a ride, and that was in March, and they went on a ride from there. March 16th, they just went to the moon.
Okay, so that's not entirely true from what I'm seeing here, but I do see a W. I see a W. That dip, that March 16th dip, March 19th around that area, that dip, they went up on around March 25th, and then they went back down on April 1st and 2nd, and they ain't seen the bottom since. They've been rising ever since.
Yeah, because even when they had that W, not to cut you off, sorry,
No,
but
no,
even
no.
when they had the W dip, when they had that W dip, they never went down to that low of 322 again.
You're right. You're definitely right. You're definitely right. The lowest they went was 357. They went to 357, but that's still a dip. But like I said, since that time, on April 2nd, they were $346, and now they're $620. Oh my goodness! Is this the Amazon of Canada?
Yes, it is.
Oh wow, wow, huh? And I actually believe that all the companies were moving together mostly, but this is something different. Ticker symbol SHOP. That's a good pick, Warren Buffett Jr. That's a very good pick.
Appreciate it. And also, if you look at their earnings per share, when they have to report their earnings, their last estimated earnings was at 29 cents. They surpassed that and made it to 47 cents.
Yeah, and I'm looking at the stories here, and the stories are saying things like the headlines are Canadian tech rises again as Shopify becomes the second most valuable company, just like you said. The COVID-19 crisis can't sink these three e-commerce stocks. And of course, Shopify is in the. So yeah, that sounds bulletproof, man. That sounds bulletproof. All
I
right.
actually own 3 shares of it myself.
Oh, that's what's up, man. That's what's up. If you got them around April, then man, you're gonna have to let me hold something, because that April price to right now, that's a big jump. So let's move on.
You know.
Let's move on. Danny 2x.
Yo.
What is your let me bring you up on screen so folks can see you. What is your stock that you would recommend for the listener that wants a return between 6 months and 8 months? But one thing that you cannot forget though.
COVID-19.
COVID-19.
Never forget it.
So the biggest thing for me is, first we need to understand principles, right? Because as we teach and as we grow in these platforms, we got a lot of people that hadn't really been in the market before all of this happened, and now they're hearing, oh, invest, right? So kind of my two guiding principles for this COVID-19, I wish I had the button. So this COVID, we need to do it like Pee-wee's word of the day. Like everything go, like as soon as you hear it, you just press it. But anyway, there we go. So whenever you hear it, you just hit the button.
All right, we'll do.
Just with understanding the market, the two things that's gotten me, right, is the industries that were worst hit but were stable before COVID, right?
Mm-hmm.
And along with that one, it is industries or companies within those industries, right? Because we need to go from a lot to a little bit. Companies within those industries that are large enough to survive COVID-19. Because the big thing now we're seeing is this is taking a lot longer than expected. All of the news now is this thing is going to be around, August, September, and even when December comes, we're going to have to deal with it then, and now it's going to have to be something we can live with. So they have to be large enough to kind of deal with the volatility right now without going under, which a lot of unfortunate small businesses can't do. So that's the one principle. The second principle are the companies that will shape our new normal, right? Because the life after COVID will not be the same life that we were used to. You know, it might get 60 to 70% of the way there, but a lot of things just won't go back to what they used to. So in the first one, the biggest thing for me, well within reach, is I'm going to go back to the movie theaters.
Uh-oh.
I'm going back to the movie theaters because it is such a novel thing. Right, it supports, right. You got a bunch of people at the table. It holds up the movie industry. Point blank period. There's no way around it. The movie industry does not make near enough money, right, without movie theaters. Direct to video or looking at something in your home does not, you know, give Black Panther all of the return that it had when it came out. So whether Cinemark or AMC, the thing is right now, they have not yet hit the bottom. So the big thing with movie theaters from 6 months to a year, because we all know as soon as this thing, you know, really dies down, the first thing all the blockbusters are gonna hit. Everyone's rushing back out to go and meet with a group of people, hang out at the mall, look at all of the movies that didn't come out. Like, I don't know many stocks that are poised to turn around as well as movie theaters because they're literally empty right now. Like, they can't reposition the business. They can't change. Well, right now, the good ones can't change to drive-through theaters like we're seeing a lot of restaurants do, so they have some kind of return, right? There's restaurants that never delivered before. After about 2 to 3 weeks of this, they all came to the table and they said, well, you know, we got to figure out how to make some money. I'm seeing restaurants where I am that were only open on the weekend and they never delivered. They made so much money, they had so much business, they were only open Saturday and Sunday. Now you can get them delivered 7 days a week.
Danny.
Yeah.
Batman in
Okay.
the theater industry.
Okay.
They both have enemies that the people love. The people love the Joker. The people love streaming services. How can you sit on this stream and tell me that the theaters are going to survive when people love streaming services? That's their enemy. They're weak right now. Their enemy, if Batman is weak, the Joker's gonna try to come in with a killing blow.
So the one thing, and I love that reference, right? And we can keep building on that. So Batman, right? You know, they have enemies, but one thing with superheroes that you forgot to mention is Batman has the Justice League, right? Superheroes,
studios,
right?
Huh? The studios.
You got it.
Okay.
They have very, very powerful friends. So it's one thing we can see your Facebook right now, but that's one thing you can't get away from is the movie theaters have powerful friends. It's really not about what it is that you enjoy. The part with the movie theaters is the studios don't make money unless the movie comes out in the theater. So it might be more convenient for you to watch something on Netflix, but that's not, you know, giving Tom Cruise or whoever's in this new James Bond crap. I think that got delayed. That's not helping them. So that's my pick, and it's not because of, you know, what we could do from a tech perspective with Netflix and Disney Plus and, you know, whatever, you name it. It's the point that the studios need them to make money, and those two know that. I mean, they got a ton of money that's sitting there. So that's one of the picks for me. And as far as shaping a new norm, real quick, my big thing I would recommend you guys do is look into telehealth. There's a few big players in telehealth. One is TWATT. As of right now, and if you don't know what telehealth is, it's essentially like you can go and, you know, visit your doctor and you can do it all from your iPad, which is what pretty much every commercial that I'm seeing right now is all about. People taking advantage of telehealth now because you don't want to go inside of a waiting room at a clinic, or, you know, of course you don't want to go into a hospital with all of this going on. They don't have beds and things to put you. So telehealth companies, TDOC is one of the largest right now. I think they're going to continue to trend up because this is one of those new normals where a lot of people never heard of it. And if I could just do my check-in with my doctor, right, plug in some thing and check my vitals, they get it sent all over the wire. Everybody's good. Everybody's happy. He can see me. Boom, boom, done, right? My kid get a spider bite. I can just connect with the doctor, point the phone at the spider bite or whatever, and my doctor can say, yes, it's infected, that will be good, I'll write you a prescription, go pick it up all virtually. So new normal, if you want to know what is going to boom, take a look at what's going on, and then, right, people that got hit the largest, that's going to bounce like nobody's business, definitely movie theater Cinemark, which is CNK and AMC. All right, those are the big two, and IMAX and others aren't. I don't know about those because I don't really think a lot of people rock with IMAX like that anyway. So yeah.
Okay, so let's look at Cinemark. Let's take a close look at these guys because I find it interesting that you chose Cinemark.
Check out those dividend yields.
11%. Okay. Okay. That's significant. When I look at their Valentine's Day normal, nice and sunny day, they were at $30. They're at half that right now. That COVID, that dip around March 20th ish, March 18th, they went down to $6. Huh. Okay. Okay. So they're up halfway. They're back halfway, and they dropped down to 25% their normal price.
And it's one of those things where I recommend, kind of looking at this chart right now, just eyeballing it. Like I would feel safe with a good to cancel order if it got back down to what was that lowest, like 6? What was that lowest, like 6 or something like that?
Yeah, 657.
So if it got back down to like $6, $7, if I'm being a little more conservative, I would just have an order go through, like right around that amount, because where we're at right now in regards to COVID, right, it shouldn't dip that too low because now there's kind of like this light at the end of the tunnel because Trump wants to open the economy, businesses want to open up, so eventually people are going to say, well, we've been open for 2 weeks to a month. I think I saw one state said they, as long as there's not 50 new cases per 100,000 citizens, they're going to continue with going through the phases to reopen it. So 2 weeks, a month and a half, if things trend down, which I don't think is going to happen, but if they do, that stock won't dip too much past its lowest because, right, as we go through these phases, eventually it's going to be like, well, movie theaters, but maybe you can only sit 10 people or 15 people or 20 people inside a theater or something like that.
So if that happens, wouldn't that significantly affect their revenue if they can only fit so many people in? That's the fear with the cruise line industry for me. As much as I expect for them to bounce back, the regulations are simply changing underneath their feet, and I don't see them being able to do business as normal.
And my comments were just in regards to the lowest amount good to cancel in that safe number, right? So even if they are at a reduced occupancy, it's really not. It's something, right? Again, you'll be safe getting in at $6 to $7 because if I'm running at reduced occupancy and just on a buzz alone, I'm going to start seeing more returns as a stock, right? Because now they can actually start maybe paying some bills, X, Y, and Z now, and eventually. Again, I don't think the theaters will forever go from 200 seats down to 20 seats. That wouldn't financially make sense. And again, the Justice League and the Avengers know that. So they're going to be pushing to those.
I let you get that off one time. I let you get it off the first time, but you went back to it. You're getting a little spicy. So let me just bring something to your attention. The studios are also working with their own streaming services. Disney has Disney Plus. I can't even think of the rest of them. But then there's Netflix, which is a studio by itself. but the studios are moving towards their own pet projects, which are these streaming services. So I don't know if that analogy can go too far, because them boys is not they not they not loyal to the theaters. As a matter of fact, the theaters and the studios were beefing over the Trolls movie. Are you familiar with that little
The newest one?
Yeah.
That one right there, War Tour.
Yes, Trolls World Tour. That movie, the studios and the theaters, they had a big thing. They said that they won't forget. Like if I Google Trolls 2 Studios forget, the storyline say, here we go, right here. Theater owners, hold on, let me put this on screen. Theater owners. Hold on, it's not that. There we go. Theater owners to Universal on Trolls video on demand release. We won't forget. They said we won't forget. Like they got power or something. So they talking real greasy, and I think it might be out of desperation. So here's the head. That was the headline. Here's what the first paragraph says. Universal Pictures was the first studio to decide to release certain films onto video on demand streaming services early because of the coronavirus pandemic. 3 of their March theatrical releases, Emma, The Invisible Man, and The Hunt, were all released this morning to streaming services. Universal Pictures also announced shocking news. They were breaking the theatrical window and releasing Trolls World Tour day and date in theaters and on video on demand. It is unprecedented and has all of Hollywood wondering if we could see a change.
So, and movie release model going forward.
But the date is important. March 21st. That's when that was said. Go ahead.
So, and here's the important part with theater. So actually, I'm looking at it right now. What I want you to look up is Trolls World Tour revenue. So Google and bring that up.
Oh, it was bad. It was bad.
Right. So let's bring it up so the people can see. Right? Because remember I mentioned that businesses are just changing models because they have to do something in the interim. Right?
Mm-hmm.
So from what I saw on my list, I got a big article here. Trolls World Tour made $50 million in video on demand. I'm not sure if that Ford's article is. So that's talking about theater revenue and everything else. So I want you to type in Trolls first movie revenue.
Okay.
So Trolls, so we got $50 million for video on demand release.
Total estimated domestic. I only see sales. I don't see revenue.
Do Trolls first movie revenue. Type that into Google.
First movie revenue. All right. I have it on screen. I'm putting it on the stream. Oh, I screwed up. Hold on.
So while you get that set up, video on demand Trolls, the recent one, made $50 million, right? Big money to a lot of people that probably ain't used to that. The first movie, before there was even a troll buzz and a troll following, made $346 million in the box office. $346 million on your first release where you have no one that knows what the heck Trolls is, compared to $50 million on your second release where you have everybody checking for it because they knew the movie was good. No one in their right mind will continue to release a movie at 6 times less than what they could make. You know, it may not come back right away, but there's too much money to be made with funneling all of your people into one model where the movies eat you $346 million off one movie compared to 50 million. That's a failure. They tried it because 50 million is better than no millions, quite honestly. So they had to do something, right? And then already spent all this money to make it, and they had to just throw it out there and see what happens. I honestly think this was a throw it out there and see what happens, and now they see. And of course, it ended up getting dropped online way before and all of that other stuff. But yeah, so that's my big thing. With again, the Justice League and the Avengers are watching, and $50 million is a drop in the bucket compared to $350 million that was made with the first release.
Okay. All right. So you're saying Cinemark. That's you made a good case for it. Your numbers, just so the people know, your numbers don't include the theater. Like the revenue from the film is including the theater. The theater gets 50%. Is generally believed the theater gets 50% of the box office. So the studios only got half of that. I don't know what the cut would be when they put it on video on demand. I don't know what that is, but and also I don't know, but that's some fair stuff. So let me bring up what I found, but you know, all right, mine. Oh man, I wish I would have invested in this. Oh sheesh, my company is Halliburton. Halliburton. I believe that oil right now, because oil was less than a cent a barrel the other day, and the reason that is because people aren't driving right now. What's happening is the oil tankers that hold the oil are all full. All of our reserves are all full. Even the president even came out saying, "Yo, I'm thinking we might as well just expand our reserves so we can hold even more oil, so we don't have to rely on the oil people that bring the oil in. But we're filled to a max of oil. It's dirt cheap." Halliburton was hurting. They had to lay off a bunch of people as well. And if we look at their Valentine's Day price, Halliburton was at $22. On March 16th, when the market fell, they were at $5.94. They ended up going down to $4.61, and now they're at $8.92. I think that oil is such a big deal right now, for what we need in order to keep everything going. I don't think oil is a bad move, and I am personally looking at Halliburton in order to.
So the only thing with oil, there's a lot of different types. There's a lot of different ways to get it. There's a lot of people playing in that field. And I don't know if you kind of been following this part of it, like the economic and not economic, the kind of global climate, nature, beauty, like that whole part with having less cars, out on the road, even over in, I want to say in Italy, they actually saw like a jellyfish. Like they've never seen a jellyfish streaming up this canal in India. And the scientists are all coming out and saying, yes, like the water's clear because you don't have a bunch of boats. And of course, there's not a lot of traffic, so they don't have to worry about getting chopped up and things like that. So even and that's Italy in regards to nature, less oil. Less things that consume oil, right? Shippers, tankers, X, Y, and Z. And even Mayor de Blasio in New York was like, everyone is getting so used to the climate. Like, this is the cleanest air, I want to say, in California and New York. Like, the air is at its cleanest, everything is good. And the mayor of New York was even like, I am going to make sure, even once we get through this, we change the way we look at, commuting and traffic and greener options. And whenever I hear greener options,
Tesla.
I get a lot, exactly, because I get a little bit more nervous with oil in that traditional sense, like that's one of those things I don't think will be our new normal.
WBJ,
Yes, sir.
how do you feel about this oil situation, Halliburton going green? I know you're a big Tesla guy when it comes to the stock. I know you like Tesla.
Well, today oil actually had a nice little rally. The rally was due to basically a lot of people picking up scraps today. So it was such a bargain. Everyone was picking up oil today, so they had like a 20% increase today. Some maintained it, some didn't. I actually purchased a company today as well, an oil company, since we're speaking of oil, called UR Energy, ticker symbol URG. And I purchased 270 shares of that at 55 cents.
I'm pulling it
So
up right
it's
now.
actually at 61 cents after market. So oil isn't going anywhere. That's my opinion, because you have your Tesla, they will make a big impact on these electrical cars because you can get more mileage now out of these electrical cars. And that was the main concern about it with everybody. But the thing with electrical cars are you're going to have to take them to a certain type of mechanics as well. Oil isn't going anywhere no time soon, because you have too many big tycoons who make their money off oil. Oil isn't going anywhere. And like you say, you have a lot of different types of oil too. And the United States is actually leading the world in natural oil right now. And crude oil is up, so I don't see oil going anywhere anytime soon. So I just think this is the time, if you could find an oil company and they down like, let's say, maybe 70 or 80%, you buy them.
All right, ladies and gentlemen, this has been great. It was the panelists on this particular show. I hope to have y'all back on either Monday or Tuesday. But it's been great. Warren Buffett Jr., thank you for your time.
Yes, sir.
Danny2x, thank you for your time. And this is another exciting episode of The World According to Task.
All right. Holla at you, mate.
Later.
Later, fellas.